All right, welcome back, everyone, to another episode of the Market MadHouse Show. My name is Cyprian Francis, and with me, as always, co-founder of Madison Trading House, Mike Patton. Good morning, Mike.
Good morning, Sip, and good morning, everyone.
Good morning, everyone. Happy August, right? I feel like for being a summer, we're getting a lot of action here, more so than we have in the past. And
Yeah.
where do you want to begin things?
Well, yeah. Unfortunately, this summer seems to pass very quickly. I mean, at first it was slow, and now all of a sudden we're in August. But let's talk about the markets. You're right. There's a lot of action this summer, which is not the norm. So, firstly, the one story. It's not really a top story, but it's an interesting story that President Biden
Survived.
test.
He survived.
Yeah, he survived, and now he's got it again. And as far as I know, he's still positive. So he tested negative, or so he was positive. Then he took Paxlovid. He tested negative, and then now he's back positive. So he had a rebound. As far as we can tell, everything's fine. It doesn't seem like his health is suffering too much, but the interesting thing about that, though, it does pose an interesting question, and that is, it brings back the issue of the effectiveness of vaccines and treatments. I mean, it seems like everything we've got is not a true vaccine because I know Paxlovid is not a vaccine, but at the same time, these treatments are just not knocking out the virus. They're just basically suppressing it. And that to me kind of raises a big concern because it just means that you basically are going to keep having to take vaccines to suppress it. And I guess that means that there's no way out. So with China's zero COVID policy, that's a really bad sign because it means that basically they're trying the impossible, which we've already said they were. So hopefully President Biden does well, regardless of what you feel about him as a person. Us, just hopefully everything works out. But it is promising at least to know that a gentleman of his age is
Without a
not
doubt. We're not
is
we're
not
not
suffering.
going into a complete lockdown, right?
Right,
Or at least
right.
we're not getting close to that. We've been there. We don't want nothing to do with it anymore.
Yeah, no, not at all. Not a chance.
And part of the drama there was did COVID come from China? So we've been beefing with China a little bit, but now this week we're
Yeah,
getting we're getting some more legitimate beef, primarily because of Nancy Pelosi.
yeah. I mean, this is. I have to admit, I've rarely seen something that seems to be so universally condemned. Like you can't even find really. Okay, let me take that back. You do have people that said positive things about her visit to Taiwan. So for those of you who don't know, which I'd be surprised if you didn't know, but Nancy Pelosi, who is the Speaker of the House, which basically is the next in line from the president, if assuming the vice president somehow
Number
passed
three,
away,
basically.
yeah, then she would then take the place of, the vice president in case that they were put to president, and if both were going, then she would actually become president. I don't know who comes after her. I'm guessing the Senate, majority leader or something like that. But anyway, point is, the last time a U.S. official of rank visited Taiwan, I believe, was 1997, and that was, I believe, Newt Gingrich. So don't quote me on the exact date, but I know it was in the mid 90s, mid to early late 90s, and it was definitely Newt Gingrich. And at the time, he was the Speaker of the House. So basically, he visited then. Before President Trump was elected, he got a phone call from the president of Taiwan, who basically congratulated him. And there was a big media kerfuffle about that, like, "Oh my God, this is going to start a war. This guy's insane." Okay, well, President Trump never really did more than that. He took the call, left it alone. He even himself said it's a bad idea for anyone to go visit Taiwan, who's a U.S. official of any serious rank. Now, the reason why the rank is a big deal is because you have to think about it in terms of states, countries. When a official of a country visits another country, that is considered a government sanctioned visit. The Chinese, under no circumstances, I mean zero possibility, that they would ever send a ranking member of their of the Communist Party of China to another state without full approval. It would have to be approved by the party. If it's not approved, it's not going to happen. They
Well,
would
what would
stop.
be the equivalent? Like Puerto Rico?
Um.
Like we're kind of like
Well, yeah.
partners,
Okay.
but
That's
we
actually
don't.
that's not a bad illustration. That's not a bad illustration. So imagine Xi Jinping comes over to Puerto Rico to say, "Hey, I'm just coming up to visit, just to see what's going on, just shake hands and tell the Puerto Ricans how much I like you guys." I mean, this is, and the thing is, China. I mean, I have to admit, I had to actually look into this over the years to understand it, because it's a very complex issue, as a lot of these things are. But once I looked into it, I understand basically this: Taiwan is officially part of China. There has never been officially any breaking between China and Taiwan since since Taiwan has existed, or as a country. But, or as a, I shouldn't say country, as a place. Hong Kong for a while was formerly British territory until the late 90s, where it passed over to China. So that's a different situation. This one is like, okay, like you said, Puerto is almost like Puerto Rico. It's like, what are you doing? So, in short, I've looked into this. The Chinese people overwhelmingly, I mean overwhelmingly, see Taiwan as part of China. Taiwan itself officially sees itself as part of China. The whole idea is that they're trying to break away. They haven't done it, but they're saying, like, they're moving in that, they're trying to move in that direction, but it's actually going the opposite. My expectation is that eventually, just like Hong Kong was absorbed by China after it was passed on from the British back to China, I do expect the same thing's going to happen with Taiwan. But at the same time, in the context of all the stuff that's going on in the world right now, of all the absolute worst ideas of when to visit, you go now. In the middle of a war between Russia and Ukraine that's spreading out, tensions everywhere. Now we got tensions blowing up in Serbia, Kosovo. I mean, and then you have all that stuff. You have the U.S. keeps trying to push China to take sides against Russia, which China has refused, absolutely refused, and has actually been drawn closer. The two sides have drawn closer to each other, as a direct result of the pressure. Now you go to Taiwan. What do they think is going to happen? Do you think China's going to say, you know what? Now we're going to think about talking to you? No, that's just literally put any momentum we had before on ice. So, regardless of what people think about China, I mean, I will freely admit I do not have a positive opinion of the Communist Party of China at all. But it's the world, and people choose how they want to live. And the reality is, it does not make sense to me, judging by, like, China's not the most aggressive country out there. Let's be honest. They're not taking over the world. I mean, they are expanding their influence. They obviously want to surpass us as the dominant power in the world, but they've mostly played on the economic side, which I actually think is smart. Like, why would you want to fight when you can just beat the other guy with, with better economy? So wars destroy everything. They set things back. And the truth is, I think eventually maybe human beings will get past the point where they realize it's not really worth it. So with Pelosi visiting there, I just think that it adds a really negative dynamic into an already tense situation. I can't see this working out well for Taiwan. This will just ratchet up the tensions between Taiwan and China and mainland China. And it's not like the U.S. is really. I mean, maybe I'm wrong. I hope I'm wrong. I'm sorry. I'm sorry. I hope I'm right that the U.S. doesn't want to engage into a direct conflict with China, and I know that China doesn't want to engage in direct conflict with us either. I hope I'm right about that, but if I'm wrong, well, I don't think this is the thing that's going to spark a war per se, but it just helps lead in that direction. So
But
what that
why is
means
it
for us,
Taiwan? Why is it Taiwan?
I
Right?
can't figure. I can't
Is it
figure it
the
out.
chips? Is it the chips? Is that why we want to have better connections? Because if they cut us off from the semiconductors, like
Yeah,
a lot of U.S. businesses are screwed.
Well, this is true. This is very true. So, I do believe that has something to do with it. But here's the thing: I didn't know this, but this was pointed out to me that Nancy Pelosi and two other senators, and it was bipartisan. It was like some Republicans, some Democrats. They went to China, to Beijing, I think, back in 1991 or something like that, and they took a moment to go to Tiananmen Square and do this like ceremonial thing. And they said, "Oh, it wasn't supposed to be public," but obviously, if you're state sponsored, your state representatives from the United States, and you're going to China as guests, of course everyone's following what you're doing. Of course, everyone's documenting what you're doing. So they try to play it down. And my experience, or my observation, I should say, not experience, my observation of Chinese policy is that they don't forget things. So this is
Got
not
some,
something they're
got
just going
some,
to forget
got some
about.
footage. Got some footage of Nancy showing off.
Yeah.
I don't think the Chinese are gonna like this at all.
Oh no, they're not. No, and again, even the Taiwanese, I think the Taiwanese maybe are thinking about this the wrong way. I think they're looking for us to push a ratchet. Well, the leadership, I believe, wants us to ratchet up direct support to them militarily, by giving them more weapons and things. Apparently, we're supposed to be shipping some significant weapons and arms to them. Of course, the Chinese don't like that, and it's so we've been delaying it, I guess, for that reason, because we know this is a very contentious issue. Well, with her there, that just kind of throws more fuel in that fire. So we don't want another Ukraine situation where everyone's saying, "Oh yeah, we're going to stand right behind you," but then when the time comes, it's like, well. So I think realistically, uh, this is just going to mean that relations between China and U.S. will degrade. China's already taken economic measures against Taiwan as a result of this. They've been blocking. They just decided to block certain imports from Taiwan. So this automatically means that the Taiwanese are now under more economic pressure because of this visit. So I hope, I hope for their sake something good comes out of this. But so far, we haven't seen any policy come out of it. We haven't seen any declared objectives of this visit, except, hey, we support Taiwan, we like democracy. It's too vague, and there's so much disagreement, even in the administration. Biden said, "Don't do it." The military said, "Don't do it." Even some of the greatest China hawks in existence says, "Don't do it." So I don't know why she decided to go off on her own on this one, and no one seems to be able to figure it out. But all I can tell is that the result's going to be negative, and it's just going to make it harder for economic recovery to happen globally, because that just puts more tension between China and us. And I just don't see how this could ever end well. I just hopefully it is able to blow over and we'll be able to move forward on some positives on this.
Yeah, and the market was down yesterday off of
Yep.
that news.
Yeah. Yeah.
We've rallied back basically to near high levels, and
Right.
most of that is off of the ISM number, I believe, this morning.
Yep.
We were going to cover on, chat a little bit about the European crisis. I think we can move on. Basically, Mike, the Germans are going to have that natural gas problem, right?
Yeah. I mean, in short, guys, the energy crisis keeps deepening. Bottom line is natural gas keeps shipments from Russia keep getting reduced. And their Russians are always quoting technical reasons. Now, obviously, it's probably only this much technical and that much political. So whatever the case may be, the situation is not something the Europeans can resolve, because they basically shot themselves in the foot on this one. And again, I don't say this as disrespect. I'm just saying, let's just be real. As traders, we got to be objective. Objectively, the Europeans made a bad decision. It was a very poorly thought out strategy on how to deal with the Russia-Ukraine situation. NATO, United States as well. So the U.S., we've been able to deal with it better, but we still are suffering too. Inflation is really crazy right now, and Europe is just out of control. So Germany's going to hit severe recession, almost guaranteed. They're already shutting off lights during the day. They're trying to conserve power at every turn, cold showers, things like that. But come wintertime, there's no real solution. The U.S. cannot possibly supply enough natural gas, and building up other infrastructure and other connections for other places to supply natural gas, that takes time. So in short, that crisis keeps getting worse, and it's going to continue to drag down the European Union. And I guess we'll have to see what happens there.
Yeah, we'll maybe we'll put it on our radar to see if we can find some opportunities, some long-term opportunities to take advantage of it since we do continue to bring it up.
Yep.
All right, so moving on in the show, if I feel like this is a light week for economic data, right? I did just mention that we had some construction spending was good. Like it seems like the economic data this week is decent, nothing to scare anybody, and the big number at the end of the week is going to be unemployment, which could move the market. Would
hmm
you agree?
It could, and basically that's on Friday. Before that, on Thursday, we have some other news being released. We do have an FOMC member, Mester, speaking on Thursday. I don't think there's much they can say at this point that's going to change the market. I think so far Powell has been pretty clear. But yeah, unemployment's going to come out on Friday, and again, the Fed wants to see unemployment essentially rise. It's hard to understand for some people, but that's what they're saying. Like it's too low, so that they definitely want it to go up. Now, for the workers, of course, that's bad. So we'll see what happens there. But as far as the markets, I don't expect this is going to have as much impact as it normally would. Obviously, if there's a really big surprise, it would. But all the signs point to us. The U.S. Is official. Well, technically, we're in recession. Of course, the White House has been trying desperately to change the definition or relook at it. There never has been, I guess, technically a formal definition of a recession, but it's been understood for a long, long time. So, in short, we are in one, and at the very minimum, we have the momentum that things are going to keep getting worse. There's no way the economy is just going to turn around on a dime, and with all this tension with China and Europe, et cetera, going on, I mean, it would be insane to think that we can suddenly turn the ship around and make everything go better. So, in short, um, when those numbers come out, I think they'll just either, if there's a really big surprise, maybe we get some response out of that. But I think in general, it's going to be a muted response and maybe immediate movement. But then after that, I think things just go back to normal as people are basically anticipating uh, what the rest of the year is going to look like. As far as inflation and recession, et cetera. So don't
Yeah,
expect too much. Is what I'm saying.
yeah. I feel like ever since that rate, the most recent rate increase, the market has just been chugging along to the upside. And
Yep.
unless we have some major news otherwise, it seems like it's going to continue. And that's why we're going to go ahead and break down some opportunities. That's the whole reason we're here. That's the whole reason we're having the show.
Right.
For anybody watching or listening for the first time, Madison Trading Software is a awesome analytical trading tool that breaks down a lot of different components when investing. And we invite everybody to take a look. We've got a free day, or a 7-day free trial. We'll go ahead and throw the link into the chat. And if anybody's listening or watching that has a stock that they want Mike to go over, feel free to drop it in there and we'll see if we can bring it up. Otherwise, I know Mike and the crew every week have a bunch of things that they're looking at. And a couple weeks ago, we did have a pretty thorough discussion on Uber versus Lyft. And that's going to be our first name here is Uber. Looking at my notes is they had earnings last week and investors are feeling optimistic about them. What are you seeing, Mike?
It was this week. Yeah, but they so Uber had earnings this week, and let's just kind of break it down. So Uber as a company starts off as a ride sharing company. Actually, sorry, start off as a limo ride sharing service company. Then it went to ride sharing, and then they start to offer other services like Uber Eats. So during the pandemic, when people were not riding in vehicles to go to work as much, Uber Eats, the food delivery service, basically took over as the dominant force. Now, since then, people have started to do ride sharing again. Ride share are activities actually up. In fact, the statistics I saw said that Ride hailing gross bookings rose 120% in the second quarter, year over year, whereas food deliveries rose 7%. So that's a massive increase. So basically, a lot of people are taking Uber again, whereas they're still ordering, but not the growth is not as much. So basically, since Uber is a technology company, what people focus mostly on is this growth. They're mostly interested in how are the sales growing. And if you look at this graphic here, just to explain what we're seeing, the sales graphic is showing me histograms that show me on a trailing 12-month basis. In other words, each of these histogram bars is looking at the accumulated activity over the previous 12 months at that time. So if there's growth, you'll see it because the amount of sales will consistently increase if you look back 12 months, from that date. So when we got to 2020 in March of 2020, we were still rising, but slowly rising, as you can see, not a very rapid pace of increase. Then it started to slump, of course, because of the pandemic. Fortunately, Uber Eats was able to make up for a lot of the difference. Lyft didn't have the same benefit because, as far as I know, Lyft doesn't deliver food yet. So, therefore, they suffered a lot more. Uber was able to make some money. And then finally, they turned around. And now we're seeing this very rapid growth. Starting in the middle of last year, we see significant growth going up until now, where we now have a 22.64% increase in revenue compared to over the last 12 months. So that's a really great number. Okay. So with technology companies in particular, investors love to see strong revenue growth. That's what they primarily focus on because in their minds, there's a simple equation. A technology company comes along first, they want to see mass adoption. They want to see more and more people using that service. Then they want to see the revenue steadily increase. Then they want to see the company able to convert that revenue into actual net profits. It's a three-step process. All of the major companies we can think of, Tesla, uh, um, uh, Facebook, any of these technology focused companies, Amazon, they've all seen the same exact pattern. It was first adoption, second revenue, strong, consistent revenue growth, and then lastly, they converted into actual net profits. So when I look at stocks for growth purposes, I need to see that profile. And investors who invest in technology, this is what they love to see. They want to see that the company is actually doing better. Also, they'll look at earnings. If we look at the earnings history for Uber, I'll go here to quarterly. You can actually see what's happening. They're losing per quarter on average. But if you look at the progression, the depth of what they're losing is actually diminishing until now. Now, why did it diminish now? They actually did some further investment. So we can't say it's because they lost users. They actually had an increase in usership of their platform. They're not losing orders for food because it increased by 7%. The only reason they lost money in this last earnings report was because of further investments they made into other subsidiaries of Uber. So basically, they're doing the Amazon model. What Bezos and Amazon did was they kept reinvesting into the company, buying getting into other services, acquiring other technologies, things like that, until eventually they built the behemoth that is Amazon today. Facebook, now called Meta, did the same thing. They were buying up other technologies, incorporating them into the Facebook model, and then eventually they're able to make substantial growth in revenue and then profits. So Uber is still not a profitable company, just to be clear. They're still losing money overall, but they're getting very, 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 very close to that turning point. In fact, if it weren't for all the reinvestments they did recently, they would have turned profitable this last reporting based on the numbers. So they reinvested, which was a good idea. But markets, they're also happy to know that Uber's increased their free cash flow. Now, free cash flow just means money you can spend on things. And a lot of times, the biggest thing they want to spend on is debt. So Uber was able to post $382 million in free cash flow, which is the first time ever that Uber's posted a positive. And again, I cannot overstate this enough. The only reason they posted a negative earnings in this case was because of that reinvestment. So, in short, folks, Uber looks like it's going to be a winner, especially against Lyft. I recently, just an anecdotal story, I recently had a ride in Lyft that was really bad. I have to admit, I'm not a hater of Lyft. I use it from time to time, but Uber always comes off more professional, and I've noticed that ever since the beginning, the first time I ever rode them, that they always have a more professional demeanor than Lyft. So I think most people prefer that just to get me to my destination, keep it nice, keep it clean. Just I don't want to be bothered. Whereas sometimes with Lyft, I think they're a little more liberal in how they allow people to join their service, and they're not as flexible in what they can do. So Uber's looks like it's on a good footing. Hopefully, they continue to do well, and I think if they do, we're going to consistently see that growth into where they're consistently able to generate net profits, not just revenue growth.
Yeah, I just want to pull up remember with Lyft, the Lyft
Yeah,
drivers would pull up with the pink mustache.
it was cool when I first saw it, but then after a while, I got a little like, "What is that?"
uh another thing is as a Uber Eats consumer, the user interface on there is really
Yeah,
efficient, right? Like
it's
it's
very
clean,
good.
it's clean. I think that even the communication with the restaurants, like from their
Yep.
end, I've seen that improve. So I like the analysis here. We'll definitely go ahead and keep Uber on the watch list and see what happens over the next, I don't know, the next 2 quarters could be really big for Uber.
Yeah, and a quick note on that too, based on technical. So I think right this second, I would wait to buy it. Just know that that should be on your list. If you're looking for something to buy that looks like it's got a good upside potential longer term, I think Uber's now at that point for sure. It's very little I can imagine it's going to derail it now. So we're coming off of lows that we recently saw that were only seen back during the pandemic. So I think right now, as a value proposition, Uber looks a lot better than Lyft, and they have a lot more things they're doing. As you said, their interface for delivery is great. I actually prefer using Uber Eats over others because of just how clean and consistent it is. Also, their drivers tend to actually get to their destination on time, consistently. So you don't have a lot of riffraff in Uber. You know that your delivery person knows what they're doing. They have an up to date vehicle. I mean, it's hard to beat them. They basically have the infrastructure to dominate that space. So I think that that's going to be a bigger and bigger part of their business too. Even if they stop doing everything else, they might still be able to be profitable just from that. So we'll see. All right. Um.
All right, so
Yeah.
so so moving on, right? So
Mhm.
we'll definitely keep Uber on our list.
Yep.
So moving on to our next ticker, it's SOFI, SoFi Technologies. Now, question: is this the same SoFi as the new LA Stadium, SoFi Stadium?
That I don't know. That's a good question. They might be, but I doubt it. I'm
It's
not
the
sure if they're that.
financial company, right?
Yeah, it
SoFi
is. I'm
Finance.
I'm not sure if they're that big yet, but maybe they are. That's a good question. I actually should check that out. But as far as they go, I'm just reading my notes here on the other screen. When they posted their earnings, they did post a quarterly loss, but that was 12 cents a share. Sorry, I didn't pull the stock up. One second. All right, there we go. So this is the stock. Now, as you can see, this is not a company that's been around for a long time. They've been around for about a year as far as the stock is concerned. The company itself, I'm sure, has been around longer. So they're definitely trading well below their highs after their IPO. I mean, they were up to around 24 plus dollars a share back in late 2021, but since then they've declined. But this is pretty typical. A lot of companies in the tech space have declined. So they're a finance company. That's called SoFi Technologies. So again, they posted a quarterly loss of 12 cents per share, but they had a 48 cents loss per share a year ago. So they've definitely improved over their last reporting at the same time a year last time. Um, And about a quarter ago, they were expected to lose 14 cents per share. So this is actually an improvement over expectations about a quarter ago. Um, Now, SoFi apparently belongs to Zacks Technology Services Industry. I didn't know that. So they posted revenues of $362.53 million for the second quarter of 2022, surpassing estimates by about 4.66%, and that compares to 231.27 million a year ago. So again, some nice improvements in their overall earnings in revenue. So bottom line is, it's not a company that's making a ton of money. Let's just be clear about that. They're a new company. They don't have a lot of history. But what gets me interested about this is that when we look at analyst targets, we have 12.25 up to $30 a share as projections. And these are numbers that actually make sense because the company's already traded to these numbers before. So there's no doubt that they can go up to those numbers again. As far as sales, like I said, you can see that they over 12 months they made over $1 billion in sales, 1.12 billion exactly. It's a newer company, so we don't have a lot of history, as I said before. But this is the trailing 12 months. If I want to look at it on a quarterly basis, I can actually see that the growth is clear. So all I did is in the software, I clicked on quarterly instead of my usual trailing 12 months view. Trailing 12 months is better for companies that are more established. For newer companies, let's look at it quarterly and we can see the growth. So they're definitely growing as far as revenue. They're not growing in terms of profitability yet. But again, remember what I said before: adoption first, revenue growth second, or sales growth, the same thing. And then last thing is they start to generate profits off of that revenue that they've been bringing in. So as long as more and more people keep using it, eventually the company's got to figure out how to turn a profit, and that's just the way usually things work. So this company looks like a decent opportunity. They are an online personal finance company, an online bank based in San Francisco. They provide financial products including student and auto loan refinancing, mortgages, personal loans, credit card investing, and banking through a mobile app and desktop interfaces. So they were founded in 2011, and yeah, they're owned actually by SoftBank Group. It looks like, so not a bad profile. So this one does show some opportunity, but as I mentioned, this one you'll have to kind of you won't have as much data to go by. You'll just have to go by the estimated potential value of the stock. Also, another thing I'd like to do is look at the lowest estimate, $7. So the lowest estimate right now is $7. It's currently trading at about 8.23. So you got about $1 downside, but you got a lot of potential upside. If it goes up, you got about $4 minimum to the midpoint estimate. And if it goes even farther than that, you got a $30, you basically got a 22 dollars potential upside. So this one doesn't look bad. So again, it shows growth. I don't see any reason why they would fall off the radar, fall off the map. So this one looks like a good buy for those of you looking for a growth opportunity.
Yeah, I just looked at some of the options. There's some opportunities there for a little longer hold. It is a good price stock. I like the risk to reward. And I did just look to see if they do own SoFi. Well, they don't own SoFi Stadium, but they've got the naming rights. And the only reason I bring that up is I've been to the stadium, and it's probably the most innovative stadium
Oh,
in the world. And so
nice.
if from a branding component, if you're attaching your name to that type of experience and the reigning Super Bowl champs, that definitely bodes well for, at least from a consumer perspective, that there's definitely going to be, acquiring new users, building credibility with their name. So definitely going to add this one to the watch list, and keep an eye on SoFi. I like the analysis there. All right,
Cool.
moving on to our third name of the day, and this is kind of touching on our COVID discussions, I think, and that's ticker symbol mRNA, Moderna.
Yes. All right. So, folks, Moderna, of course, has been one of the best stories of the pandemic in terms of profitability. Obviously, the pandemic is not a good story in terms of what happened. But as far as the businesses that have thrived through it, Moderna has definitely thrived. Let's just look at this and see what we can look at. So, for example, this is a map of 3 years worth, a chart of 3 years worth of trading history for Moderna. Let me just hide some of the parts here for just a second. Oops, actually turned off the chart. Uh, there you go. So this is Moderna, and you can clearly see the growth. This is one of the stocks back then. Oh, sorry, let me turn my light on. 1 second here. This is one of the stocks that back in 2020 we identified and put out alerts, lots of alerts for this company, and these were all prior to November. So since then, it went on a really big tear, but eventually we topped out somewhere around 500 bucks. So some people were in this for the entire ride. Some people were in it only for part of it. Doesn't matter. It was just one of those stocks where a lot of people did really well. So it was a great alert. But looking at the future, the reason why it's down is because growth prospects have changed. During the height of the pandemic, you keep seeing more surges and new strains and all this stuff, and people are just expecting more and more and more and more vaccines. But then you had some problems with approvals in other countries. They were looking to expand to have more vaccinations from certain demographics. Those ran into some hurdles. So in short, Moderna got clipped. Pfizer's still pretty much the king of the vaccine world right now, but Moderna is still a major player. So as of right now, the numbers came out. Their second quarter earnings beat expectations, but they wrote off $500 million, $500 million in expiring COVID shots. Now, I don't know the details of how exactly that works, but I'm guessing that what that simply, well, I know what it means. It means that the company had took a hit because they had to write down vaccine inventory that expired, or is expected to expire before it can be used. In other words, they produced it, but the demand didn't follow. So therefore, they made all this stuff, and now it's like, oh crap, no one's buying it. So they're going to have to take a write down of about $500 million, which is significant. But all in all, let's just look at the numbers. The company generated $4.7 billion in sales for the quarter, the second quarter of 2022, a 9% increase over the same period last year. So they beat quarterly earnings and revenue expectations as a result. They were able to make an adjusted $5.24 per share, which is an 18% drop from the second quarter of 2021, but it was still better than estimates said it would be. So they were expecting them to lose revenue over what they were doing in 2021, which makes sense because it's a different year and things have really changed. If you look at 2021's chart, you can clearly see that it was a very different world then as far as profitability than it is now. Nevertheless, they were still able to beat expectations. So, in short, um, let's just kind of take a quick look at the technical details of this chart, the stocks. I want to go back to a 1 year view, and right now, and if I'm looking at it, which we are, of course, here's what I can tell us at the moment. I don't like to make I don't like to make trades on vaccine stocks anymore. When the pandemic was in full swing, you could realistically expect that vaccine sales were going to go up because we didn't have enough vaccines to go around. Now we're kind of in a different situation because you have a lot more vaccines available. You have a lot more distribution. You have newer vaccines, newer treatments. You have less of a push by governments, although they're still pushing, but you have less of it to mandate vaccinations. So, in short, you don't have as much built up demand or a reason to expect future demand. The current strains of COVID are more infectious, but they're less deadly. They're much less deadly, but much more infectious. So with the treatments, and, looking at, like, for example, President Biden, et cetera, there's enough out there now where while we still will see COVID deaths, remember that COVID deaths just means that a person died and they had COVID. Doesn't mean that COVID killed them. It could be due to other complications. Who knows? So the stats are always a little fuzzy anyway, because of the way different the different groups are tracking them. But in short, unless we see a very deadly killer of a virus, which I hope and we all hope we don't see, but if we did, and Moderna's vaccine was effective against it, then of course that would boost their sales dramatically. So for right now, I would say probably the stock is going to get a good run up in price from where it is now, but I can't really say how far because there's too many what ifs there. So let's look at the fundamentals and let's just see what the projections say. Okay, the first thing you got to notice here is there is a drop in sales. So if you look at their numbers, they actually are seeing a drop in sales right there. On a quarterly basis, we can see that drop. We do see assets rising. Net income is down as well. So they're not really making as much money. If you look at the earnings, you can see they're actually slumping. Projections into the future are not so fantastic. And this is the one that's really the most hurtful. 2023 is projected to have vastly fewer sales and earnings than we see in 2022. So they made a killing in 2021. They, of course, made no money in the previous 3 years, but they crushed it in 2021 as a result of the pandemic. But now, they have other products, but nothing that sells like their vaccine. So unless we see a constant drive or push for more vaccinations for whatever reason, this doesn't look like a good long-term prospect. So short-term targets have it at 235.91, but the lowest target has it at $77. I don't think $77 is going to happen. So I would just discount that lowest estimate. The average is 235.91. So we do have significant upside potential. And if I look at this from a charting perspective, based on where it is right now, um, based on where it is right now, you could lose about $50, somewhere between $30 to $50 a share if this thing doesn't keep going. So that's your downside. But your upside, if the targets are set, for median 235, um, it's about a 50-50 there. So I don't really see this as a strong opportunity. So for those of you who are looking at it, it's great that it's moving, but I don't really feel, based on the numbers, that this is going to be a great place to park your money. Also, Moderna doesn't pay any dividends, so if you're a long-term investor, well, you're not going to be collecting any revenue from that. So, in short, it's a company that may have something promising down the line. I haven't done any thorough research about their future products they may launch, etc. So just based on what they have now and what they're projected to do with that in the future, this one looks like a nice move today and recently, but not something I would recommend holding.
Yeah, we might have even just missed that move today, just because we started the show a little bit later. But that's a nice solid move. But your analysis makes a lot of sense. I almost feel like you could play it as like a virus hedge, right? Like if you really think there's going to be another virus and we're going to shut down
It's a good
and
point.
all this, then maybe you want to hold some of these biomedical names in the portfolio to even things out. All
Sure.
right, moving on. Um, if you're watching or listening for the first time and you're liking what you're seeing on the Madison Trading platform, we got a link in the chat. It's going to give you a free 7-day trial. And in the reason that we have the show and we go over part of these different sections of the software is because there's so much to do. There's so many amazing features, and every week we try and highlight a new feature that you can add to your tool belt so that you can analyze and get the information that you need. And so this week, Mike, we're going to be talking about a proprietary indicator or tool that you guys had developed called the MTH Vol, which basically allows you to, better project, short-term tops and bottoms. So
Yep.
let's dig in. Tell me about this bad boy.
Okay, so on the screen, I got a lot of stuff visible. I'm just going to hide a few things so you can see which one we're referring to. On the software, I have to do is click these buttons here. It makes something visible or invisible. So now, once I click here, I am now left with this price channel and the price bars. And the price channel is actually what we want to focus on. That is the MTH fall. Now, what is it? Well, basically, what it does is it takes data from the markets, including options data, and it uses that to make projections into the future of where a stock might be at any given point in time. So what that means is if you get to the top or the bottom of this range, you would be in an extreme type of move, which is likely to be less sustainable. Now, of course, a market go into an extreme at any given time and keep going. So we have to keep in mind that these don't say that we cannot possibly get past these lines because, like right here, we did. But also, look at what happens thereafter. We suddenly turn around and go right back into that same range. Or over here, after earnings, we have this big spike, and then what happens? Bam, we get slammed back into it. We get to the top again, and we get slammed into it, gets to the bottom, etc. Now, a lot of people, when they first see this, they think these are Bollinger Bands. They are not Bollinger Bands. Bollinger Bands have their use, I guess, but this is not something that we're using because, for one thing, Bollinger Bands are based on what's already happened. It's already happened. So if a stock suddenly gets volatile and starts to move in a big way, the Bollinger Bands expand. For those of you who know Bollinger Bands. But if nothing is happening, the Bollinger Bands just stay narrow. This is different because it actually anticipates future volatility. And again, it's based on data that's already in the markets, data including stock data, options data, etc. All these things, when pricing, when stocks or options are being priced, they actually are showing the projections. They're showing the future beliefs that are built into those stocks. And you have to compare that to data like the fundamental data that we have, for example, the valuation data that we have. Those things can be used as a way to gauge what the markets are really expecting out of a stock. And what we found is that these are extremely accurate. They're extremely useful. So I'm not trying to cherry pick here because Moderna wasn't the stock I was going to show, but since it's on the screen, let's just go ahead and show it. So you can see here, like right there, we come down below the bottom, and then next thing you know, we go right back up. Or down here, we come down to the bottom and then we go back up. We get to the top and we come back, then we go to the bottom, then we go back up. We get to the top, then we come back down, etc. So the way that I use these is to help me not to get into a stock at exactly the wrong time. In other words, if I'm trying to sell a stock and it's right down here at the bottom, unless there's some event like earnings coming up where I don't know what the outcome's going to be, if I'm just in the middle between earnings or something like that, and we're down to here, if I want to sell, I'm not as likely to sell there because I know there's a better chance than not that the stock is going to rebound and I may be able to sell at a higher price. And if I'm in a stock that I bought and it's way up at the top here, either I'm getting out or I'm looking for the exit as soon as possible because I know eventually this movement is likely to fail to keep going. And that brings us to our current situation with Moderna. Moderna currently is trading right at the top, right to the number of where that volatility based projection is. So, in other words, it's projecting to potential top, potential bottom, which is what we call volatility. The middle line is, of course, as you probably guessed, the midpoint between the two sides. But essentially, once we get to here, it's going to be harder for the stock to keep going. Moderna doesn't seem to have as much great news anyway, so I don't think the news that they have so far is going to be enough to keep it moving past that extreme. So most likely you're going to see it slow down. Now, this is a very powerful tool because everyone always asks that question. Well, now that I'm in this stock, where do I think it's going to go next? If you're on a moderate pace up, even if it's a fast move, as long as you're on a steady, consistent trend up, the market's going to tend to stay with the boundaries projected. Now, of course, the channel is going to adjust based on the overall trend, but all it's saying is now we know which direction the stock on average is going. What's the top? What's the bottom of the likely range it's going to trade in? Now, for those of you who trade options, this is such a powerful tool. This is literally what I use consistently to make trading decisions on where to sell options or if I want to where to buy options. If I'm going to buy options, let's say I want to buy call or vertical call spreads, I want to buy when we're down here looking like we still have a trend up overall. Or if I'm looking to do the opposite, I want to see a stock is going to trend down. You see the stock get up to the top of the range. I want to do my puts there if I'm buying them to go down. And if I'm selling options, then of course which is a more advanced strategy, but that's primarily what I do. Usually I'm going to be selling. So if I'm going to sell puts, I want to sell exactly where I think the market's going to bottom out and start to go back up. Or if I'm going to sell calls, I want to sell just where I think the market's topping and it's going to go back down. So, folks, for those of you who don't trade options, don't worry. It's already part of the program. And for those of you who want to learn how to trade options or learn how to use these tools more effectively, we actually offer classes as well. So all you have to do is once you sign up to take your trial of the software, go ahead and give us a call, or we'll contact you either way just to make sure everything's working. And then you can always ask us about the other additional training services we provide to make you more efficient of using these tools. But in short, this is just one example, but we can literally click on anything that I want, and it's not going to do any different. You get to the bottom of that range, you tend to bounce up. You get to the top, you come down. And remember, these are done before the stock gets there. It's not telling me after the fact what to do. These are already projected before the stock gets there.
All right, I got this is a wonderful tool, and I've got two questions.
Okay.
One, real quick, how do you add that to the chart?
Well, I actually have it as a default. It's called the pattern chart. So you go up here at the top right, and you click up there. You should be on the default profile by default, but I've updated the software to automatically for people who sign up for the first time. It's automatically going to take you to what's called the pattern chart after me, of course. So you just click here, and it just loads up that chart, and it's going to have three things on there. We only cover one part of it. If I want to hide the other things, the blue one is the MTH vol. So this is the visibility right there. If I want to hide the other things, I can just click on the eyeball, and that hides them. In another lesson, we'll go over what the other tools are used for. We did actually go over the lines, the trend lines once, but we can also go over some of the other tools too. But this is the most powerful of them all, because while you will have times like here where the market does go way below the projected range, the tendency, though, is that it's going to turn back around and come back in pretty quickly. So if you see this happen, just know that this is likely to be a very short-lived situation, and most likely it's going to turn around sharply thereafter. So you can't always know when that turnaround is going to happen, but when it does, it's going to be a big move up. And if you can
All right,
catch that, it'll be pretty effective.
yeah. Second question is this tool only applicable to stocks, or can you use it for indexes and some other types of assets?
You can use it for any assets that have options, because we part of the formula is to use options data. So if we look at ETFs like SPY, right? The Spider ETF, I have the same data there. Let me just go to a 1 year chart. As it stands right now, we only projected on a 1 year chart. We're going to update it to add up to like 3, maybe 5 years at the most. But this will give you a way, like right now, you can actually look at 2 years worth of data. You just have to go to 1 year view. But any ETF, especially for ETFs, it works even better for ETFs. If you're anything that is very calm, cool, and collected type of stuff like ETFs, it works even better. Usually, the exceptions come from the smaller stocks or the more volatile stocks. So ETFs like the SPY, you can get some really solid buy and sell signals off of that. In fact, I would never trade without it. And all the people that we have, friends, clients that are using it, they all swear that this is probably the best tool they've ever encountered to help them anticipate where bottoms and tops may come in.
MTH Val, that's the name of it. Once again, if you're interested in using it, testing it, seeing what the hype is all about, head on over to MadisonTradingSoftware.com, sign up for a demo, get a walkthrough of the software, start utilizing it for your own trading. And if you got questions along the way, that's what the team is here for. So, Mike, thank you for that rundown. I really like that tool. I'm definitely going to add it to my charts, keep an eye on it. Love some of the selections for the day. And heading into the rest of the week, the beginning of August, any tips, any ideas? What do you think people should be keeping an eye on?
Well, other than staying cool, I would say just make sure you watch make sure you keep track of what's happening on Friday with unemployment, etc. But most importantly, keep an eye on relations between China and the United States right now, because we already are on a we're on a terrible footing between Russia and the United States now. If China becomes another major, if we get into a major dispute with them, whether military or not, it just makes it harder for things to calm down. And the last thing we want is for China to start giving direct support to Russia. If if we're trying not to, if we're trying to resolve all this stuff, the best thing to do right now is to calm down, back away, and reassess what we're doing. So hopefully they do. So keep an eye on that. I think that's going to have more impact on the markets probably than anything else until the next Fed number comes out. So we'll see.
All right. And with that, we'll go ahead and close it out. If you enjoyed the broadcast, hit that follow, hit that like, hit that subscribe, hit that retweet button, right? Let's get the word out. Madison Trading House, Madison Trading Software, the best in the business. Michael, thank you for your time. Thank you, everybody, for tuning in and checking us out. With that, we'll catch everybody next week. Appreciate it. Peace and love, everyone.